Hello everyone, in this video I will tell you how my Bitcoin prediction for this year has changed. Let's go! You will learn why and how my expectation for Bitcoin in 2024 have changed, what new factors I have discovered, what fundamental risks I see, and why the market situation may not develop the way I would like. Why is this video important to watch? After the last Bitcoin halving in April, there were a lot of optimistic expectations and brave predictions about the Bitcoin price. As it turns out, all is not as simple, and halving does not set the price of Bitcoin immediately to the moon. The more I thought about it, the more complex the picture appeared, so I want to share with you the factors I believe to be important in assessing the current state of the Bitcoin price. Watch the video till the end, you might find cool insights on what prospects await Bitcoin in 2024, what past predictions turned out to be false, and what trading strategy to use right now in the summer of 2024. By the way, feel free to write in the comments how much do you think the Bitcoin and other cryptocurrencies will cost by the end of this year. So let's start. It seems that 2024's main event in the Bitcoin world is the long-awaited halving, which took place in April. Many experts assume that after the halving, it wouldn't be long for Bitcoin to reach new highs. Their argument, among other reasons, took root in the deflationary model of Bitcoin's value, as its total supply is very well known to be limited to 21 million coins. Let's add to this the fact that many people lose their private keys, which leads to the fact that the supply of Bitcoin is actually decreasing. Furthermore, over time, due to halvings, the influx of new coins decreases by half approximately every 4 years, and the fewer new Bitcoins we have, the more precious they become. Therefore, it is fairly reasonable that halving indeed adds up to an increase in Bitcoin's value. However, this doesn't happen instantly. A clear example is the recent April halving in 2024. It is the fourth halving for Bitcoin. With it, things turned out somewhat differently compared to the widespread expectations. Bitcoin did indeed surpass its historical high of October 2021 at $69K, setting a new benchmark around $73 and $8K on the Binance exchange. However, this actually happened in March before the halving. The somewhat unexpected part is that immediately after halving and up until now, we have not yet seen the new ETH, which, frustrating as it is actually not that unexpected if we leave behind all the hype from ETF and halving. I must confess that I overestimated this hype and held my expectation maybe a bit too high. So now is a good time to make amends and take a clear view of what is going on with Bitcoin. By the way, write in the comments, did you expect Bitcoin to perform better than it does now? Let's start with the current situation. It looks like $73.8K is a resistance level. If it can be surpassed, then Bitcoin should show growth. The support level is at the minimum point in the post-halving era of 2024, which is $56.5K. If this level is breached, then a decrease to around $48K is quite probable. We have discussed the entry point into the Bitcoin in a separate video. Just follow the link in the description. The price of Bitcoin is currently fluctuating on the range of 60K to 70K, and it is accompanied by a decrease in volatility as indicated by the downward slope of the average true range ATR indicator on the daily chart. It looks like we're having a rather boring interlude in the between halving and delayed reaction to it, which we await from the price of Bitcoin. To pass the time before we see some dynamics, let's try to take some lessons from history and analyze the dynamics around previous halvings. The penultimate halving third in history took place on May 11, 2020 at a blockchain height of 63K. The maximum price on that day was $9,945. However, the all-time high before May 11, 2020 was actually in December 2017 when the Bitcoin price was at $19,600. It was only at the end of November 2020 that the 2017 maximum was overpassed. The new all-time high was reached only 6 months after the third halving in history, and not at all immediately after it. Let's dive deeper and look at earlier dynamics. The second all-time high occurred at blockchain height 42K on July 9, 2016. Bitcoin was trading around $680 at that time. Just think about it, since that Bitcoin is worth 100 times more. Press like if you think that the current all-time high is far from a limit and that the real to the moon still awaits us in the future. Before the second halving, the all-time high was in November 2013 at $1,163. The halving then took place in February 2017, and since then Bitcoin took some time to grow. It was able to reach a new maximum only 7 months after the second halving. As you can see, the situation is quite similar. So looking at the past halving, Bitcoin typically doesn't immediately reach a new all-time high right out of the block reward reduction. Instead, it usually takes its time, often around 6 to 7 months. Returning to the last event, it's also worth noting that the current all-time high was reached just before the fourth halving. This might indicate that Bitcoin may need some time to firmly establish itself above this level. So it seems that over-optimistic short-term predictions for post-halving time were a little bit far-fetched. This doesn't mean that Bitcoin won't grow. On the contrary, its long-term dynamics make a solid ground for further growth, and the deflationary logic of halving is still a strong point. However, rapid growth forecasts should be reassessed, and it may be better to build a trading strategy based on technical analysis. Write in the comments if you trade using support and resistance levels, or do you prefer long-term investing and holding? Lastly, there is one more thing to consider which can actually ruin the game. I'm talking about the stock market, which is now clearly overheated. Let's look at the S&P 500 chart. Since the beginning of 2023, the index has been rapidly growing. The last significant correction occurred in the spring of 2022, but even with that in mind, the index has fully recovered and it currently sits at an all-time high. And all of that with high key interest rate. The Federal Reserve is clearly striving to meet the inflation target, so we're unlikely to see low rates in the near future. Nevertheless, despite the high interest rates, the market continues to rise. Sooner or later, we're almost certain to face a significant correction in the stock market, which will likely impact the cryptocurrency market as well. While some believe that the crypto market is not affected by the stock market, it is worth considering that after the approval of Bitcoin ETFs, this market instrument can indirectly influence the price of Bitcoin. It is obvious that the price of Bitcoin affects the spot Bitcoin ETFs, but during a correction in the stock market and with a decline in the interest from institutional investors who bring tons of money into ETFs, we may face a reverse scenario, a decline in Bitcoin price. This, of course, doesn't mean that Bitcoin will crash to zero, but the damage should actually be quite significant. Write in the comments what you think about the stock market state and how it can affect crypto. Okay, let's not end on a sad note. The goal of this video was to show how my expectations shifted from a bit too optimistic to more or less realistic, and by no means catastrophic. Yes, possible stock market correction is still a serious thing to consider, but overall, delayed post-halving effects certainly have a lot of potential and are worth looking for. So guys, thank you for watching this video till the end. Push like, notification button, and subscribe. Also share this video with your friend or relative, whoever is interested in that topic. So Michael was with you. You were on TradingView channel, and bye for now.